Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, and I thought it was time that we looked at some recent REDFIN data. REDFIN puts out a lot of great information on a weekly basis. A lot of viewers are, I guess, confused about my call that there will be no median home price year-over-year price decline in 2022. They are pointing at Redfin information week on week, month on month. So I thought I would pull up the latest. I thought we would go through the article. I thought we would look at the actual charts that people are sending me when they tell me I am wrong. We will look at the data. I will not hide from anything. I will highlight what I think is going on. I will highlight my call has not changed. Some of you hear me showing this extra information and you think I'm changing my opinion. I haven't changed it one iota. We will not see, in my opinion, my guess, my crystal ball, which is as broken as yours, a price decline in 2022 for median home price. If we want to talk about 2023, 2024, those are different conversations. I do disagree with the lumberjack landlord who sees a 10% correction 23 through 24, but that's an interesting conversation to have. So without further ado, let's bring up Redfin's most recent article. We will go through kind of the summary, but really we're going to look at the charts because I understand some of these charts are like, hey, idiot, price decline coming, price decline coming. But let's talk about what I see in the data, what I see coming. It is one thing to pull up a chart and read a chart. Anybody could do that. I'm trying to take my history, my experience of 20 some odd years of looking at my market daily, and I'm trying to use that. I'm not simply reading a chart. I'm trying to look into the future, and looking into the future is hard. It's difficult. In housing, it is actually relatively easy to look into the future 60 or 90 days. That's where I think a lot of the crash callers get it wrong. They are expecting some tectonic event in a week or a month or a quarter. And that's just not how the real estate market moves. And that's why it is easy to say they're wrong, because they are. But the longer you have the duration, and certainly if you take it out to 2 years, the future is fuzzy. But again, if you still have channels calling for a November crash, that's comical. That's comical. But let's look at the data, because some of the data really points to the fact that I'm wrong, but I have not changed my opinion. Let's see. Can I do this? Let's see. Stop sharing. Let me try that again. Here we go. Okay, so this is the latest Redfin data. It came out on the 25th, which I think was Friday. I could be wrong. Basically, there's a couple of things in here that we'll highlight. We're going to spend a lot of time on the actual charts. First and foremost, I want to highlight the very first line. New home sales fell 15%, or no new listings. Sorry, this is why it's important. New listings fell 15%. If you've been watching my channel the last 10 days or so, this is what I was afraid of. This is what I thought was coming. Remember, on this channel, we called something in early July that July 20th would be a tectonic shift, and it was. I indicated that National Association Realtor report would shake the market. It would cause both buyers and sellers to react differently, and we were right. Some buyers got scared. Sellers really started to list their properties, FOMO, fear of missing out, many of them with wish pricing. We are starting to see those listings get canceled and pulled off. And now we are starting to see, as we get into the end of August and certainly through the month of September, sellers are just simply not selling. If sellers believe it is a bad market to sell, they will stay put. Motivated sellers are out there, and we all as investors are looking for them, but there's not 6 million motivated sellers. There's 500,000. There's a million, something like that. And again, we're going to go from 6.9 million total transactions to something in the low fours, high threes, peak to trough. So again, new listings falling 15% is what we called on this channel. I think it continues through the rest of the year. This was the biggest annual decline since the start of the pandemic. Please take note. Sellers are telling you they're not selling. The Fed broke housing. We are not only seeing record demand destruction, which everybody is calling. We have correctly pointed out on this channel a more important variable that is now broken is supply destruction. And we are seeing it take shape right now. We are seeing the median asking price fall 5%. That is interesting. We did see the sale price drop 6% from a record high in June. So that is a month-on-month decline. We are seeing share of homes with price drops level off. Again, this is kind of the noise after the storm. And remember, July 20th, we were going to get 6 or 8 weeks of just utter churn and noise as some people tried to get in at the last minute. Now they can't. Now they're pulling them off. Lots of things are going on. The market may be kind of closing out that churn phase from September 15th to October 1st. And then after October 1st, the market is going to level out. You and I as investors are going to be able to find the motivated sellers, more importantly. I do want to highlight one thing. I do believe Open Door is about to be a motivated seller that all of you should be hunting with. I got a note from a student yesterday. It might have been the day before. I think it was yesterday morning. They are shopping in Phoenix, Arizona. They found an Open Door listing that Open Door had bought for $502, listed at $562, on the market for 100 days. Long story short, they got it for $420 and 2% seller credits. So what I would tell you, given that one story, is if Open Door is in your market and you can find days on market probably greater than 90, maybe start fishing greater than 75, start writing low offers. I'm a 420. 430. I don't know, 420 or 430. Just, even if it's I think it was 430 with 2% closing credit. So it was like 422. That's amazing. That's $150,000 cut or $130,000 cut. Go get it, right? Open Door is a public company. They're going to try to list it. Eventually, they're going to take a loss. They're going to reserve for bad debt, write it off. So if you are shopping in a market where Open Door is prolific, write low ball offers. Be warned, don't write low ball offers on first day listings with Open Door, but maybe day 75, day 90, certainly day 100. So here we go. Sellers are coming to terms with the fact that the volatile mortgage rates have dampened demand. Some sellers are pricing lower and some homeowners are staying put. This is the tug and pull in the market. If you are a seller that has to sell, you got to price lower. If you want to sell, you're just going to stay put. You're going to sit tight for a year. Because again, you have a low mortgage rate. Because they're nervous, they won't be hesitant to give up their low mortgage rate. Right here. Sorry, excuse me. Trying to fight off a sneeze. They're hesitant to give up their low mortgage. REDFIN economist Chen Zhao. No, home sales are no longer rising. Yeah, number of homes for sale. Number of homes for sale are no longer rising. This is what I was afraid was coming. If you are in the housing market is going to crash camp, you don't want to see that. And this is what I thought was coming. So some kind of the leading indicators before we jump in. Mortgage rates for the week, 5.5, roughly, down a little bit from the week before. People looking for homes for sale, down. Home buyer demand down. This is all down, right? All of this transaction activity, mortgage apps down, everything's down. Demand is down, but also supply. That is the big difference. We don't have wave after wave of supply. So again, kind of the data on listed for sale, it actually went down 1%, almost, or 0.5%, 6.6% year on year. It was down 15% month on month. Couple of metros were down, the same two as last week, San Francisco and Oakland. Median home price listed for sale increased 10% year over year. So we're still up year on year, double digits, although I expect that to come down. I expect prices to be relatively flat. So now let's get into the charts. So here is the first chart where a lot of people are coming to me and saying, hey, Michael, how can you possibly not look at that red line and realize that the red line's about to pass the blue line? Well, again, I don't see that. I don't see that in 2022. That's the key. Could it pass it in 23 or 24? I don't know. I ain't made that call yet. But it won't pass that line, I believe, in 2022. I also believe that this downslope was really caused by the July 20th, as we've talked about many times on this channel. I believe what will happen after this is it will start to flatten out. It will get down to maybe 3% or so, but it won't go negative is my call for 2022. But yes, you are right. I look at this chart and I totally understand why everybody is just looking at this and they keep drawing the red line lower and lower, ultimately crossing the blue line. I don't see it. I believe the natural forces that are going on, lower inventory, lower demand, just means we bump around the bottom and these lines don't cross in 2022. But again, I do understand what, I understand why some of you think I'm crazy. Asking price, right? Asking price again, the slope is downward. Much of this could be some seasonality in the works for sure. But again, I don't see these lines crossing. Again, I see a lot of sellers taking their houses off the market. We're going to see record supply destruction and record demand destruction because also let's not forget what Jerome Powell did on Friday. He basically said, the housing market's done. It's a disaster. We're going to take rates higher. The housing market threw up at 6%. How do you think the housing market's going to react at 7%? Transactions are going to fall off a cliff, a la 1980, 81, 82, where there's a 50% decline, which is, of course, what I've been calling for the last 3 to 6 months. Home buyer mortgage payments. This is a crazy chart. Again, this is going to go up. I believe right here we have a mortgage rate of 5.5%, 5.55. I think over the next 90 days, the mortgage rate could be 6.5, 6.7, 6.8. And that just means higher and higher payments. Higher and higher payments. Pending sales. This again goes back to my call for transactions. Remember, pending sales is actually not a closed sale. So not only do we have pending sales down 17%, but we also have had record cancellations. I think last month was, historically, it's been around 10%. Last month, I believe, was a high of 17%. Might have been 18%, but something double digits and higher than normal. So not only do we have pending sales down, we also have record cancellations, which means less transactions. And as you can see, we are going to this line here, I believe, continues the trend. What you see here in pending home sales is seasonality. What you see in 21 and 20 is seasonality. It'll get lower from here. New listings. This is the one. This one scares me. I believe the Fed broke housing. I believe one of the charts that will point to just how badly they broke it is this chart here. Listings are going to crater, especially if rates get to 7%. If we get rates to 6%, we already know what happens. It's bad. Rates go to 7%, it gets really bad. This line may go almost straight down. It is going to be bad, in my opinion. Active listings. You can already see active listings rolled over. And this is what I called about a month ago. I didn't know if it was going to happen. This was one of my looking into the futures and going, I don't feel good about the tea leaves. And I was right. I think active listings are actually going to roll over. It's going to be a really weird thing. Active listings are going to roll over, but days on market are going to go up. How does that work? That's not normal. Well, it is normal in an environment where you've destroyed supply and you've destroyed demand. We are going to see listings, in my opinion, fall the rest of the year, much like these gray lines and blue lines. It's called seasonality. It gets slower into the end of the year. I believe this red line, the higher rates go, will actually roll over faster because more people will stay put. Most people don't have to move. Most people can delay a move 6, 12 months. And what sellers are telling us right now is it's not a good time to sell. So guess what? They're not going to sell. It's really that simple. It is really that simple. Pending sales under contract within the last 2 weeks. Again, I think this goes down. So we have rolling inventory. Inventory is rolling over. Supply is down. Demand is down. Hence, pending sales down. 24% of pending sales under contract. So this is basically highlighting that, hey, there's still some activity. This is where I think VA and FHA buyers will play. If I was a real estate agent, I would definitely skill up on those two areas. Some properties are just perfect, right? If they can pass an FHA and VA inspection, they can still go to a low down buyer. I think first-time home buyers have been ignored. I believe what they will see is first day listings, first week listings here. If I was an investor, I want to be very clear. I would not be looking, not N-O-T, not be looking at anything less than a week old. Let the first-time home buyers, FHA, VA play there. Median home sales up. This is going to go up, even though inventory is down, but demand is down. So days on market should grow. This should go up a lot, in my opinion. 38% of homes sold above list price. Again, I think that will probably come down. 8% of listings had price drops. Again, this was kind of the July 20th. Let's list, let's cut. I think this normalizes going forward. Again, you're going to have less listings, so less price cuts, I think. Average home price sold for 100% of list. It's kind of, I think it might go to 99, something like that. I don't know anybody that should be paying list price today. Home buyer demand holding reasonably strong, actually better than I expected. So that's what I got. Again, I understand why people think I'm wrong. I'm being very clear. I think what is happening as we end August and we head into September, October, and November is a market that is going to slow down. We're going to see active listings fall. We are going to see cancellations up. We're going to see days on market up. The market's just going to slow way, way down. I see a market of flat prices. Again, it ain't going to be negative in 2022. The math does not support that. Could the lumberjack be right? 10% over the next 12 months? Maybe, but certainly not 2022. But that's what we'll see. We'll keep checking out Redfin data. I think a lot of those graphs are going to flatten out. We've kind of seen, again, remember we talked about July 20th being that date. If you looked at a lot of those charts, you would see July 20th or thereabouts as the day the world shifted. That is something we talk about in this channel because I'm in the know. I'm not simply reading charts. I'm trying to predict the future. You can obviously disagree with me, and that is totally okay. I'm wrong all the time, but I take a shot. And I don't just read charts. So let me know what you think. Leave comments below. Have a wonderful day. Bye-bye.